Starting off with with a look at the economic picture as a whole in Kenya, we've seen data emerge, latest inflation numbers showing that inflation's come in at 3.6% compared to 3.5% in June. Overall, market reaction to that slight tick higher?
I think basically what's been happening when you're looking at the aspect of inflation is basically the issues of our consumer index. And what we know is currently the dwindling supplies of the food chain, which basically are meaning that commodity prices are going to go up, in essence, and we're going to see that people's purchase power is actually going to be eroded. And in as much as we're looking at, the key issue is how the inflation is actually being studied by the relevant authority, which is central bank here, and how what factors actually being able to factor in. Because what I know, in as much as the economy has strong fundamentals in terms of growth, the government has been able to implement the stimulus package. A couple of things have not been gotten right: the issues of credit, the issues of lending, and basically at the end of the day, the basic needs that that the common mwananchi actually needs to have access to are becoming pretty expensive. So with the dwindling supplies for commodity will definitely mean that inflation is actually going to go up. And in as much as the sentiments at the moment are bubbling with the the positive news of a possible yes vote, the question is what happens after. Because at the end of the day, this is just the beginning.
This, of course, in a context where we've had a domestic credit growing by 26.6% in the first half of this year. What's your outlook on that front, where we know that there is room for commercial banks to start lowering their rates right now?
I believe the move that was taken by central bank late last week was actually a move to stimulate commercial banks to be able to lower their lending rates so that they can many business people can have access to money and be able to do business and be able to sustain themselves. But the question is, are the banks going to do this? Because they're going to factor in a lot of issues, and knowing how banks normally, the factors they normally do factor in before they can lower the lending rates, we're going to see that this will actually take another quarter, because they'll factor in bottom line, they'll factor in the revenues, and at the end of the day, with the expansion, with most of them doing crazy expansion strategies, I don't think they're just simply going to follow what central bank actually has asked them to do, because at the end of the day, most of these loans have not been pretty cheap, and with what's happening on the foreign exchange front, with the shilling being weak against many major currencies, they're going to factor in this before they can actually look at lowering the lending rates.
I honed in on that domestic credit number, but gross loans also increased by 30 billion shillings between April and June to 828 billion shillings, with more of a quarter of that figure taken by the manufacturing sector. What kind of growth are you forecasting out of the manufacturing sector in Kenya? Certainly, we've had global PMI figures stealing quite a bit of attention this week so far.
What I believe is the manufacturing and the infrastructure sector in this country is actually growing steadily, with a lot of support from the government. And I think the manufacturing sector has been able to get a boost from the East African Community Protocol that was actually enacted on 1st of July. And I believe most of the corporates are looking at how they can tap into emerging markets like Rwanda and Uganda and Burundi, and especially in the sectors of energy and transport. I believe the reason why most of the loan are going up is because of for them to be able to expand. But the question is, at what rate are they being able to get these loans? Are they sustainable? So at the end of the day, in as much as they're able to access the credit facilities, the question is at what rate? And now those are the issues that many commercial banks, in conjunction with central bank, are going to be looking at.
And when looking at their sustainability, of course, earnings comes front of mind as well. The stronger shilling, like we have the stronger rand here in South Africa, working to hamper exporters and earning potential there. Just how innovative are companies becoming right now in making their way to becoming more globally competitive?
Kenyan manufacturing companies and Kenyan corporate companies have been studying other emerging markets like South Africa and Egypt to be able to compete on a global level. And I believe what the government has done through the Ministry of Finance is actually instill discipline. Basically, at the end of the day, the issues of accountability standards, processing issues, legal framework, these are the challenges that many companies have been facing here, and at the bottom line, the cost of production. But what I know is with the East African Community Protocol actually in effect, it's either they change the strategy game and be on top of the game, or they're going to lose out to cheap competition from China or Brazil and India. So at the end of the day, I believe many manufacturing companies in the country are doing their level best to be able to compete on an international scene, and being able to, because like a while back, the Brazilian president was here, and one of the key talks was sustainable energy. We've seen India and the aspect of technology, and we've seen how Kenyan corporates are actually learning from the two giants on how to sustain, on how to be able to compete on a global level. But at the end of the day, as you've put it, the access to credit facility, accountability, and government support through incentives and legal policy frameworks are going to be the key issues.